Hello and welcome. It is the first day of December 2020. My name is Derek. This is the Money Charts channel, and all bets, all trades, well, that's within each his own risk and their own reward. Risk reward management is always job number one, and there's a lot of fantastic reasons or situations. The high probability for Litecoin to gain, well, now that's down a buck or two in the last few minutes, well, more than 50%, as it's $89.13. This setup is showing a lot of phenomenal things on multiple time frames right now. Price action got up to that of $94.05 on the date November 24th. It did not resist 68 and a quarter on November the 16th. It did piercing extra support it on the dates of the 27th and the 28th. However, it looks, well, it's a failed move, the Brit sell. For it to be a real move, it has to hold and stay and not violate above that 61.8%. Well, I don't need to calculate. I know it's pretty much around 84, even not, if not 82. And it's pretty much made it to previous high in here. It's gotten above the 18 average of highs. It did so yesterday. And even in today's session, we can see that we've had an intra-move period where the line on today's lows matches that of the November 29 highs, pretty much. And it's already managed to come back up from that point. We'll look at all the short-term and long-term stuff is just damn cool. As it goes on the weekly, these lines and how I draw them, they're the Fibonacci retracement, high divided by low to the exponent of these numbers, 76.4%, 61.8, 38.2, and 23.6. Multiply the low again, which is like near 22 on this. That's where these lines come in. But how they play like this so like all the time, like, I don't know, it's just awesome. Usually piercing extra when they do. So we get up to this Fibonacci level, and we pretty much, it's a level where it is resistance. It stops going up, but it doesn't go down. It just stays there, congested for a few days. It actually tries to go up on the 18th of February week, that is. And then it has a move where we don't resist this level, like in here. But it did come back to it, which it kind of did here too as well, but not in the same way. And then concise move, piercing above, supporting this, but for no momentum. And then a concise move to next level, which did have momentum. A failed break it, followed by a failed breakdown. And then we resist this Fibonacci, supported, but really it spent the entire time, like from like really late August, or mid-August rather, of 2019 through that of like November of this year. So year and change. And as it went from this low, which was like pretty much a 2-year anniversary of it now, December 10th, 2018, it got up to this high in June. It only took a half a year from the biggest lows. And it's been a year and a half just consolidating in a small gap within the 6-month run. Escaping it now, so a lot of reasons why I think that this could have a nice, fast move up to the key level. And when it gets to the 136, 138, 140 handle, now what? Do we have resistance out there? And now, a lot of times I'm going to say, and I don't talk much about strong resistances often, I probably should, but it's not. I don't look at it as weak resistance on a fast move. I would definitely give it the credit of the doubt that we could have some at that point, but give it the benefit of the doubt that if it doesn't have resistance, that it's just gonna fly. And no matter what, when we're talking 76.4, I don't give it that much credit, but though I do, I realize it's like a small step, the next key step, the previous high. And we'll see what happens at that point. But monthly chart, it was an attempt to get it above here. Nah, not so much. Then definitely flattened the band out, but I mean, it's it's really got to get above this level now at 136 to attempt a real noticeable attempt to get this thing back in a bull market again, because it established this resistance back in June. Getting it above it, you get it. Okay, here we are, 210. Oh, just phenomenal. And it's probably going to have a big move on that. Now, I mentioned I'm going to talk about short-term analysis as well, too, because there's a lot. When I look at everything to the 1, let's do the 4. There's the comeback and the rejection. So we have this high, and we pretty much matched it already. Why are we not? I mean, this is the period here. What's the deal? Yeah, what's the deal? And remember, that's what's the deal? And yes, that question mark, and you can find out the deal with shorter term analysis with the previous period. There's 3 hours and 34 minutes left in this, so this is a new period. We're only 25 minutes into it. Time right now is 11:25 a.m. Eastern as I'm doing this. What's the deal? Okay, let's take a look at the hour. Ooh, baby. There you go. What does this tell us? It tells us a lot. It's your typical. I mean, this thing should fly today. Like literally today. It's a 1 hour time frame. Over the next 5, 6, 7, 8 periods, this thing should go sky high. We break out above the 18 average of highs on November the 30th at 8 a.m. That was yesterday morning. Establish a level of resistance at 11 o'clock, a little bit of sideways action, and then even some more at a higher floor. So we consolidate near 85 in the early afternoon, consolidate near 87 in the late afternoon, early evening. Then we have another leg higher, barely breaking, but noticeably breaking the previous high at 2100 hours, 9 p.m. Eastern Time. Successfully correcting, but not able to break out. Thus, you can say unsuccessfully correcting. 5 o'clock and then 6 o'clock happens. Near fall. Breaks down the key level support of 85, breaks down the key level of support of 84. Comes back down to where we came from on the end of the 29th and the start of the 30th day of November, which was the day before and the day before that. Now we come back up to this piercing above previous high. A couple red candles in here. So now you have key consolidation from here to here. Let's shorten this baby out some more. So 15. There's that failed breakdown. Didn't resist it when it first came to the 18 average of lows. And that was a phenomenal game to get there. You go from the low of 79 high change to 84 mid change. So that's a gain of like 9%, maybe 8% in just a few hours. I mean, this is crazy. 80 to like 92 is like a 15% move. But anyway, you don't resist it. You stay within the band, and then you go to the 18 average of highs. Then you just phenomenally destroy that at 9:30 in the morning. Now it's correcting that destructionary move. Fibonacci from this high to this low. I mean, I can tell we're pretty much at the 38.2. We're back to the area where we came from is between 87 and 90. I mean, it's going a lot of choppy moves, a lot of, not choppy, but back and forth moves are playing. But this thing is looking wild, and I would be expecting high probability of a big gain, of like a 50% move compared to the opposite one in the opposite direction. We're going to finish it with Litecoin, a lot of the same similarities here, and I like the look for this to have a decent gain here. 1 hour term time frame, making a lot of nice patterns of higher highs and higher lows as well. Definitely very volatile. I think that's the word I was looking for. I was thinking choppy, volatile moves. And I think what's nice to see about the fact that it's this damn volatile is we could just not only have maybe that move to that 140, the fast move to it, but maybe it's not the resistance point and it goes to 2, 3, 4, 500 sky high there. And you know, I want to see that. Because that's I'm holding it. I want my investment classes to go higher, of course. But the daily term time frame is what really excites me about Litecoin, as the price action in here, I guess Bitcoin that is In this down move, most certainly a failed breakout here. And yeah, it had its fast move. Or its concise move. That's why I don't like to say fast move, because that wasn't really all that fast, but it's most certainly concise. But well, things are getting volatile. I mean, you go up to this high, down to this low. Even this daily session in here. This high, this low. And it's not doing the resisting the 18 lows. It's not resisting the 18 closes. Why aren't we doing any of the stuff that's going to happen if this selling move is real? Because it's probably not real. It's probably a failed one. I mean, if the play here, if you're to go long because you think this is awesome, and you say, yep, this is a failed move, thus the play from this high to this low because of this move and how it's reacting above the 18 average of high. So yeah, I'm going to buy it. I'm going to look for a bigger gain. Well, now you're going to have to understand, and I hope if you're understanding this, you understand it from this way. Risk-reward management is always job number one. So the reward you're looking for is for this to go whatever higher. And then you're going to sell and you're going to have a gain. Excellent. But risk management. You realize that if this thing goes like this, this isn't going to shake you out. You're not going to get scared on that. But where are you going to get shaken out at? Well, you're most likely going to be calculating Fibonacci from this low to this high. And you're going to have to see it break down below the 76.4. Those are the type of calculations and exercises that I think are very important when you try to understand the situation. One of the things I was going to do this last week, and I wish I would have, was just come out and just bring up my first. Well, those first two picks would have kicked ass for this season. I was literally going to go out and talk about the Atlanta Falcons as a great play against the spread against the Vegas Raiders in the NFL. Thank you, Ralph Michaels from Wager Talk, because a lot of the information he spewed out was what led me towards it. There was so many reasons I had for that, and it was one of the biggest spread covers by a team in like so long. It was like, of course, and I didn't say anything. I didn't even bet it. And then major information, this is late news, but major information happened within the Denver Broncos not being able to play a quarterback. All three of their quarterbacks were ineligible to play in Sunday's game. Thus, they had to hire somebody on the practice squad who was barely a quarterback. Well, I've thought about this a few times before. What would happen if you had 11 great, phenomenal athletes in football, but not one single one of them offensively knew how to throw the ball? I'm a huge component of the Wildcat. I was a big fan of Tim Tebow. But in order for the Wildcat to work, you need to have those guys that can throw the ball. If it doesn't, then I don't care if you're Dalvin Cook or if you're O.J. Simpson of the past, you ain't going to run the ball effectively. So I knew with the Denver Broncos game that the likelihood of them passing for a first down was just 1 or 2 at most. They were not going to score an offensive touchdown. They were not going to run that ball effectively, maybe 1 to 3 first downs on the run. The only way they were scoring a touchdown is if the defense or special teams were to do it, and the only way they're going to get a field goal is if the defense or special teams would give them into position to do so, meaning I didn't think the offense could even move them into field goal range. The spread came out at 16 points, and the Denver Broncos favored to score 9.5 points, and I was just thinking, do I make a video saying I love New Orleans minus 16. I love the Broncos minus 9.5. The Broncos got 3 points because the defense gave them a field goal, and they covered that spread fantastically. But the reason I'm saying this and bringing this up is because in the world of sports gambling, any type of decision gambling, prop betting, you're looking to find probability in your favor at a high rate of return. And trading markets is a huge risk-reward, high advantage or disadvantage, depending on where you are on the fence, portion of the game. And I do believe that we have another touts or handicappers in sports and what financial advisors should be talking about, I suppose. And I'm not a financial advisor, so this is not a financial advisor advice because I'm not such that person. But I think that they should be saying that this is a phenomenal spot to buy Litecoin. Of course, I think the better trade is against the dollar, as I mentioned from the outset. I mentioned a little bit of the risk-reward management within it. And of course, whatever you decide to do, it's your own risk, your own reward. And the easy way of what that means is, I mean, there's really two ways. There's two things two reasons I'm saying it for. I mean, number one is the understanding. If you just understand the form that the risk-reward portions are there in whichever aspects, I think the better off you're going to be. But, I mean, for like the whole disclaimer point of view, let's just go the obvious. If you take anything that I say and you're right, let's just assume you buy the Litecoin and I'm right, and it goes to 138, 140, you sell and you got your gain. I'm not going to get anything. But at the same point, if you make that bet and I'm wrong, and the market goes down and you either sell for a loss or you keep on holding at lower prices moving forward, I ain't going to give you any consolidation on the loss. I ain't giving you anything. It's your loss, your own risk, your own reward.